Our next session would be on REIT and InVIT's monetization to mobilization. I'm just going to give 10 seconds for everyone to settle down before we begin with the next segment. Goyal, the MD and CEO of NHAI InVIT. He's the founding member of NHAI InVIT, which since inception has raised funds with an enterprise value of 12,000 crores. Ladies and gentlemen, let's hear a round of applause. Come on, we can do better with our energy. Mr. Vinod Rohira, Managing Director and CEO of Mindspace Business Parks REIT, equipped with an MBA from Booth School of Business, Chicago, and a law degree from Mumbai University. He began his career with K. Raheja Corp over 2 decades ago. Also joining is Ms. Meghana Pandit, CIO, India Grid Trust. She has 19 years of experience in investment banking and corporate finance covering infrastructure sector. We have Mr. Nitan Chhatwal, Chairman SHREM InVIT. He's the Chairman and Board of Directors, along with a first-generation entrepreneur with experience of 30 years in establishing businesses. We have Mr. Vinay Sekar, the CEO of Cube Highways Trust. He has played leadership roles across investments, financing, and asset management. We also have with us Mr. Sandeep, the CIO of SBI Pension Funds. He has more than 15 years of experience across financial sector. So, Tamalji, are we ready? Yes, over to you, sir.
Well, you can see my plight one after another. There will be more, so you have to bear with me, suffer me. Nothing I can. Okay. And well, this is REIT and InVIT's monetization to mobilization. This is a very literate audience, so I'm not getting into the nitty-gritty, what is REIT, what is InVIT, what is monetization, etc. No, I just have if there is anybody who is just have any uninitiated kind of stuff, so just to say that this is an instrument of raising money, and this is whatever little Google work, thanks to Google auntie or Google uncle, whatever you say. Singapore, Australia, US, many of the developed markets, they are thriving, these kind of instruments. And I'm not getting into technicalities, but REIT is nothing but, sort of, which makes a dormant asset marketable. So it's you finance through capital markets in a different way. You, instead of owning the property, you hold the units, and that's the way forward. And and InVIT is something what's happening in the infrastructure space. And correct me if I'm wrong, it's a REIT in the infrastructure space. That's the InVIT in some sense, right? We have been talking about it for years, but in India, there is not much of progress. As going through the numbers, probably REITs could be about 80,000 crore. That's the kind of numbers I'm getting. Mostly public institution, mutual funds, etc. Very little retail. Banks are not excited because it's a part of their capital market exposure. So that's the REIT part is concerned. There are many issues. We'll get into that. And infrastructure project, of course, there is InVIT also, even much smaller. Hardly there is any deal. I'm not getting into any names, etc. It's all in public domain. But primarily there's a difference because the REIT is owned by an entity, but when it comes to InVIT, it's not owned by, because you are, you just own it for, you have the cash flow, but it's owned by the government. Be it a toll road or be it anything, those are the kind of stuff and all. So these are instruments for raising finance, but for multiple reasons, they're not been picking up in India. And we are here to discuss why is this, how to make them more marketable, how to create liquidity, etc., etc. And again, if I'm not mistaken, particularly in the higher interest rate cycle, probably it's more difficult because your rentals don't go up in tandem with the interest rates for commercial space and etc. So with this, you have a panel. We are running behind schedule. It's 3:22, so we'll end about 4:10. Is that okay? 4:10, 4:12. So that's kind of 50 minutes. So tell us, I will start with this. I'm happy to see a representation by a lady here, Meghana. So maybe we'll start with you. Give your preliminary comments. Then I have one or two specific issues. We'll get into that. But first one, we'll discuss each of you. After Meghana, probably we can start from you. What are the issues plaguing this market? Why aren't they? And if I am wrong, please tell me no. I am wrong. Actually, it's thriving. So feel free. Okay, Meghana, first you.
Sure. Am I audible? Yeah.
Yes.
Thanks. Thank you. So I think it's been almost 5.5 years since the first InVIT came to the market, and almost 7 years since the draft regulations also got approved. I think it has been a great run as far as InVITs and REITs growth journey is concerned. As we speak, we have almost about 19 REITs registered and 19 InVITs registered and 3 REITs with a total AUM of almost about $43 billion. As far as IndiGrid is concerned, we've also had a 5-year run now from a AUM of 3,700 crores to now 21,000 crores across 16, 17 assets that we own in our portfolio. So I think along with, the draft regulations, one great, our experience has been tremendously fulfilling in the sense that the way the regulations have also evolved across various regulators, and tremendous applause to Ministry of Finance, SEBI, RBI, in which over a period of time, right from liquidity to enabling different sources of financing for InVITs and REITs, it is opening up. Of course, there is still some room where we can see some sort of anomalies between companies and in business trusts for that matter, which need to be addressed, certain things on the taxation matters, etc. But by and large, I think the role that InVITs and REITs are playing, and which we can see going forward, given the NIP and the NMP that is lined up, I think InVITs and REITs are going to play a very, very critical role to that. So I'll just stop here as the introduction.
So I said from the right, let's not, I'll go by some names, because the NHAI is the pioneer, the dominant, if not the only player in the InVIT space. So let's hear NHAI. Again, as I said, the difference is whether REITs even can be perpetual InVITs is not because of the maturity of that 15, 20, 25 years kind of thing. And I thought also typically the InVIT space more because it's always principal and interest combined, right? InVITs, unlike the REITs where you get the principal later. So we'll hear, we'll hear Suresh first, NHAI. Yeah. Yes.
Good afternoon, all. Thank you for the invitation to be speaking at this conference. So, I think I would like to, share a small correlation to where REITs and InVITs are. We all started on this journey 10, 15 years ago. It's like the child, right? So, where as a parent you're raising your child, and suddenly, but then you realize that the child has become an adult. And so the REITs and InVITs are at that stage in which very quietly the industry started. It was, shall we call it, not so glamorous part of investing. The investors were not looking at it more closely. But of late, in the last 12 to 24 months, I think we have come to the stage in which, forget about the product, but I think there is a genuine investor interest and appreciation that is coming through from the domestic investors and the international investors. Specifically, the InVIT route is being looked at by the government, and I represent the road sector of the national monetization pipeline, which is the largest in the national monetization pipeline at about 26%, about 160,000 crores. So the government is not only looking to monetize assets through the InVITs, but also has given us the mandate, and I'm really pleased to be speaking in the conference hosted by Trust, because the way trust is propagating and growing the industry on the debt side, and as well as taking this InVIT and REIT product to the various categories of investors, the government sees this as an opportunity to create an asset class where the Indian savings, long-term savings, start to go through. For them to go through, real estate and infrastructure had traditionally been owning the asset. But how do you get partial ownership of that asset and partake from the long-term benefits that come from? And these are real assets. So, and they have a high degree of correlation to the GDP, the returns that the country generates, growing income levels, etc. So we are just scratching the surface at this point in time. The kind of assets that can go into the REITs and InVITs, and most importantly, what kind of savings that can move into this sector actually makes me representing the ministry as well, a lot of enthusiasm and hope that this will become a very, very prominent asset class. We would be happy to hear comments from others as well, but it's my very strong conviction that this is the beginning of a very big change in the overall dynamic of Indian financial system.
Thanks, Suresh. This is exactly what I was saying, that you don't own the assets. It's owned by the government, right? So that's how do you sell it, how do you parcel it? That's the thing. So from InVIT to REIT, so let's hear Vinod, Mindspace. So let's hear you. Preliminary remarks, then we'll get into the specifics. And like last time, we feel free after round one, ask questions. Yeah, Vinod, over to you.
Good afternoon, everyone. It's a pleasure to be on such an august panel with so many of you in the middle of the afternoon waiting to listen to us. So we'll try and do justice to what you would like us to share. I think REITs as an asset class globally is very well established and a stable asset class. Cumulatively over the world, almost $2.5 trillion worth of assets are under a REIT. America started way back in 1960. And more than $1.6 odd trillion worth of assets are traded under REITs in America. Every single asset class that is established annuity is really REITed in America. So you will have hospitals, schools, residential, logistics, retail, commercial real estate, prisons, etc., etc. In India, we are just taking baby steps, while InVITs have probably become adolescent. We are still babies. We have just 3 established REITs in the country, primarily with one asset class, which is the core commercial real estate in India. But in the last 3, 4, 5 years, of course, with a blip with COVID that came and now is hopefully behind us, we've seen the markets dramatically change. And the product is now getting very well established, very well understood. We still are a long way off from making sure the larger universe participates in the investment of REITs. But people have understood now that the embedded value is really about the intrinsic value of asset, the annuity return that you're getting in terms of yield, and the cumulative appreciation on the asset class, primarily because of the NAV values that keep moving up. We have to understand that we are amongst the lowest rental assets in the world, especially in the established markets, because you're still trading at $1 shy of $1 rents, compared to the asset quality, which is now equivalent to grade A assets worldwide. And very soon you will see that stabilizing and merging and blending with the Asian markets and global markets in terms of values. So having said that, the roadmap ahead for REITs is really strong. There are a whole bunch of assets that can really stabilize with annuity and get into the mainstream of REITs. Fortunately, because the government took 5 years to build the legislation, they have taken great care to ensure that this is not a speculatively built upon asset class. It's got a lot of regimented drivers to make sure you'll go straight line for growth and give real value back to the investor. And you will see a lot of the asset classes that cut up to a REIT will get listed and come into this marketplace.
When did you enter, one of the older, like if I'm not mistaken, Embassy is the oldest and the biggest, right? So Mindspace, which year did you enter this market?
So we got listed on 7th of August 2020.
Okay, okay. So yeah, in the preliminary thing, let's hear the another Cuba Highways, gentleman, Vinay.
Thanks, Tamal.
Preliminary remarks, then we'll get into some specific thing.
Sure.
Feel free.
So yeah, I mean, without sort of repeating what my colleagues here have sort of already said, I think Suresh actually absolutely perfectly described it as a child that has grown and become an adolescent now and in the process of flourishing. I think I'd like to add that there is now a recognition that InVITs are the key structure through which infrastructure assets, especially mature infrastructure assets, are to be held in India. I think there have been multiple structures that people have experimented in the past, but now there is a clear recognition that this is the mechanism through which infrastructure assets need to be held, right? Now, given this recognition, the amount of infrastructure assets that are already available to be consolidated in the industry, plus the kind of capital that needs to be deployed for future is tremendous. So we're in just the road sector, we're talking about $100 billion outlay over the next, at least till 2025, and a $20 billion, as Suresh said, monetization pipeline. So you have a tremendous amount of potential projects that would definitely come into the InVIT fold. I think the challenges really are solving for the funding of this. As has been sort of said in the panel, you have a plethora of international investors who have come in, who have anchored several of the InVITs already. These include pension funds, sovereign wealth funds. There is significant domestic interest as well, led by the mutual funds, treasuries, and also insurance companies that have started coming in. But I think there is significant scope in being able to, for example, get pension funds inside InVITs, because you have global pension funds coming into India searching for yields. I think this would be attractive for Indian pension funds as well. And also, I think over a period of time, getting the non-institutional capital into these products would be the key challenge for this industry.
Brookfield is already there among the global funds, right? Brookfield is already there.
Yeah.
I think Blackstone is coming very soon.
Yeah, correct.
What would be the right size? I said about 80,000 odd crore. Is that the right size or
correct? It
total?
Is, 80,000 crores currently as AUM, but I would not be surprised if this doubles in the next couple of years.
You spoke about pension funds, so let's hear Sandeep, SBI pension funds, the excitement about, I mean, is there others? Are you really excited about this or what's happening?
Thank you. Am I audible?
Yes.
Thank you. So, representing pension, I probably would say that this is
on behalf of the industry.
Yeah, that's
Feel free and.
So, I would like to say that basically this is an ideal product which is actually been created for insurance and pension. Though I would accept that as of now it has not been as widely accepted within the pension due to various factors, maybe related to the industry, related to the regulation and other things which needs some change, and probably and the industry also needs to evolve accordingly, so that the product becomes more sort of acceptable from the investor's perspective. Being the only investor in this panel, probably I would be kind of afraid to speak anything about the product, but yes, I agree with what Mr. Suresh and others on the panel said, that this has been actually evolving, and there are a lot of things which needs to be done within the product to actually make it more sort of attractive, acceptable for the investors. If we have to compare it with global InVITs and REITs, probably we would say that we are sort of kind of scratching the surface at this point of time from the Indian REIT and InVITs perspective. So yes, from an investor's perspective, as a pension fund, I would say that I definitely like, or maybe the industry definitely likes. We have participated in few of the issuances with respect to REITs and InVITs. But however said that, there has not been a widely, wide participation of this from the pension as a whole, for REITs and InVITs.
Sandeep, I mean, not SBI I'm talking about, but the industry. What would be the pension funds exposure in the overall pie in percentage term? I don't need to, we are not asking you to give specific.
I not want to put it in number, but I would want to give it in percentage, which is very
please,
small.
Please.
It would be around 0.5% of our total AUM, which probably we would be sort of, exposed to InVITs and REITs. So, though I would say that it's very small in terms of the size or the AUM that probably Indian pension is today.
So comparatively, mutual funds have more exposure than pension funds, right? Is that correct? Would it be, or it's a very similar?
Yeah, probably yes.
Probably yes. So that brings us, sir. You are the last speaker.
Yeah.
Have the last word, the first round, and then we'll take a few questions like last time we did. Please raise your hand and make it brief, and then we'll get into some of the. I mean, you raise the issues, so you have to answer how to overcome them. Yeah, please.
Good afternoon, everybody. My colleagues on the panel have explained the InVIT structure. I would just add that SEBI and the government have created a very fine structure for investment into the infra, which is especially revenue generating. India is a growing country, and a lot of infra is going to get created in next coming years. So this structure, the InVIT and the REITs, are like a funnel where all type of investors from general investors, public, corporate, institutions, the banks, everybody's in debt and equity funding gets into that funnel and gets distributed into a wide variety of revenue generating assets. So after the finishing of the project, when the project becomes revenue generating, all these assets, if they are shifted into the InVIT, the capital for the developer gets freed and more development can happen. So from my understanding, this is going to have a very good churning effect for generation of infra in India. That's what I would like to add.
Thanks. So the summary is everybody is convinced about the future, but everybody says that there are issues and they're evolving, right? Is that correct? Because India's growth story is largely dependent on the infrastructure story. That's very, very critical that you are raising. NHAI knows that better than anybody else. But this is one of the instruments which is popular in many markets. I read out certain names. But India, it's half a decade now, roughly about we are into it. But not getting the momentum as yet. Of course, in between COVID came and there were disturbance, etc. So we'll get into some dissecting what are the issues and how we can overcome. But before that, is there any question anybody has? No? This lady? Yeah, please. Can she have the microphone, please? Quickly. Yeah, just make it very brief and introduce yourself. And just tell who are you addressing this question to.
Hi, good afternoon, everyone. My name is Vinay, and I look after the investments of a family office in Mumbai. I want to understand from this panel, having some experience in investing in REITs and InVITs, should this be looked at as a passive asset class, or should it be looked at as an active asset class, considering that the market depth is still not there?
Okay. Whoever wants to answer, please.
Yeah. See, it has to be taken as a passive investment. Definitely now the depth is coming, you will be able to sell it off or trade in it. But as a family office, I would say that in the revenue generating fixed asset class, it should be looked into.
Yes, any other question? Yeah, this gentleman, please.
Yeah, hi, Aditya here. So, quick question around every one of y'all almost spoke of the rate of adaptation and how we are right now in the novel stage of adapting REITs and InVITs. So, what's stopping the transference of the capabilities and technologies, considering that the rate of transference has quadrupled in the past few decades in terms of things happening in the Western world and happening in India right now? So, why aren't we able to keep up to that at a much faster pace? Why are things not up to the mark yet?
Okay, that we have gone into the dissecting it, but anybody wants to answer this question, why we are not, anybody, any of you?
It's a simple answer. The regulations came in late here and they are being adapted as soon as they have come. So adaptation is happening.
Okay, you want to add from on behalf of NHAI, he was the largest player in the...
I would
InVIT space, what would be your share?
Sorry, sir?
In the InVIT space, what will be your share of the total market?
As of now, not significant, but given the amount of national monetization pipeline, we would become the largest.
Okay, sure.
By March.
So tell us, by March, yes. So tell us.
So I think I'll point out two data points for you to say that. See, in any InVIT or REIT, the ability to track cash, right? Ultimately, it's a vehicle for collecting cash and then distributing it to the unit holders. The ability to track that is very, very important. And I think all of us sitting on this panel and all the investors who have invested into these instruments can comfortably state that there is a very high degree of transparency that is available now. The most difficult one was on the national highways, where you have to collect cash from millions of users across the country. And how do you ensure that that transparently gets transferred from various accounts into ultimately the user's account, into the unit holder's account? With the adoption of FASTag, which is something that perhaps does not get as much notice as, let's say, UPI or others, I think the fact that today 98% of toll collection in the country is happening on FASTag, it is working seamlessly, and the same day the monies move from the user's account into the concession holder's account, and with full transparency and almost negligible errors. I think it's just a wonder of technology that we have been able to adopt. Right? Number two, with regard to adoption of Western standards, etc., I think that's a bit overrated, I would say, as a point, because both in terms of technology and in terms of a regulation also, whether you take the stock exchange regulation, whether you take InVIT regulations, I think our standards are perhaps superior to a lot of the countries around the world.
Yeah. Thanks. Any other question? Otherwise, we'll shift to this. Anybody? Yeah, there's a gentleman there. Please. Can he have the microphone, please? Yeah, my microphone is coming to you. Then you'll get back. Yeah.
Yeah.
Please.
Excuse me. Yeah, I have two questions.
No, it's not working. Yeah. Yes.
Yeah, I have two questions. One is that...
Can you introduce yourself, gentlemen?
Yeah, I am Rakesh from Bank of Baroda. If we look at the investor pattern for the InVIT or REITs, when we look at the stock exchange where they disclose, most of the investors are either foreign investors or long-term investors like insurance companies. So what can be done that other investors, like say commercial banks or PFs, they can be roped into? Another is that what can be done for giving more transparency in the placement memorandum of the InVIT or REITs, because it's very difficult to capture the cash flow based on which we can make our investment proposals. Thank you.
Okay. So those who have not answered, maybe Vinod, you can take the one first question is this: how do you get different class of investors? And then maybe Meghana or you, whoever wants.
So I'll speak on behalf of the REITs. Essentially, the market has dramatically changed, especially after SEBI allowed for smaller investments to come into REITs. Now, when we started off, our base was, I think, between 3,500 and 4,000 investors. Today, we have 45,000 investors in the REIT. So that's changing really fast, and the awareness is actually going to bring that to a much larger number. You will see a lot more playing in the REIT space. So that part is now getting taken care of. Further participation in the debt part will increase only when pension funds, insurance funds are allowed to participate, and there's a lot of scope there to grow further in that segment. Having said that, coming back to transparency, I think from a REIT's point of view, the cash flows are very clear. The definitions of NOI and NDCF are very clear. They are properly documented and put out into the open every quarter. So you have no challenge with kind of understanding how the cash flows are coming through. It's absolutely crystal clear. This is an annuity, there's simple rental income. There's no complicated mechanisms to calculate your revenue. It's pretty straightforward, and you can actually map that very easily and track it and watch its growth. So I don't see that as a challenge from a REIT's point of view at all.
Okay. Anybody else? How do you, for a lay investor or even intelligent investor, how do you calculate the returns? That's the second part of the question was there. First was that why aren't we seeing different classes that we have already discussed. But no, tell us that. Yeah, can you make it simplified so that there are people here who would probably like to invest so that they can get a sense?
I think as a retail sort of, if you're solving for retail participation, I think there is some amount of education that needs to probably be done. I think retail investors are habitual of investing in real estate assets, and therefore there is significant amount of participation in the REITs. However, infrastructure assets, I don't think individuals have typically owned infrastructure assets. There is getting used to the models of the revenue models and the cost models in those assets. But ultimately, given that there are limited classes of assets, these are fairly straightforward and simple. You're referring to the placement memorandum. In fact, the InVIT placement memorandum goes beyond what you typically have in your RHP. It actually has 3-year projections that are available. So you actually put out projections there. In addition, there is also, for example, on the roads side, there are traffic projections that are given for the life of the project by independent third parties. So it is certainly possible for any sort of investor to put together the future cash flows and predict the kind of yields and the internal rate of return that they would sort of get for their investment into an InVIT. So,
yeah. Anybody else want to add anything just to simplify how to calculate return so that we have already discussed that it's a passive investment. That's a sort of not so positive term. So if you want to excite them and tell them, look, this is the ABC, and that way that ensures your return, you get to know. Like stock market is uncertain, but fixed deposit, you know, irrespective of what's happening, our principal is saved, and plus we are getting 7 or 8%. Now, depending on the inflation, our money to the extent we are earning, and of course tax bracket. So very clear. But REIT and invest, how do you explain to them, particularly the retail investors?
So I think it's a difficult task to basically simplify complex things, but let me give it a try. So there are two kinds of sort of, asset class which we can put it in this category. One asset class would be something where you have a stable cash flows, something like a transmission asset or a road annuity, where you know that the amount of cash is constant over a period of time, lifetime of the asset class, and there would be certain cash flows which have got some kind of volatility in the form of toll or sort of energy generation projects, something like that. So you have to project your cash flows keeping in mind the class of asset that is part of the InVIT or REIT, and depending upon your risk appetite, maybe you can discount that cash flows to arrive at sort of what is your the NPV of the NPV from the project. So again, I mean, the discounting factor can be different for a different investor depending upon his own risk appetite. But I think what is more important, how do you look at the overall cash flow of the entire project? Again, in this, there are two ways to look at it. There will be InVITs and REITs, which basically, they are actually perennial in nature. Reason being that the real kicker for an investor comes in with the growth of the assets in the existing InVIT and REIT, which are basically, there in the market. So, as an investor, I should look at the existing set of assets which are there, part of the REITs and InVITs. Along with that, what is the potential that these assets, these REITs and InVITs can acquire in the form of new assets, which can give you, incremental growth in future. That's how I would like to say, in an easy term to basically explain.
Thanks. Meghana, you want to add anything? Otherwise, no? Fine. So, any other? No. So, we'll get back to some micro issues. Okay. Say that almost everybody, I think all of you agree that there is enough has been done as far as regulations are concerned, policies are concerned, they are all in place. Even taxation, there is no double taxation, right? It's only one, I mean. So, where some of the issues we'll just touch upon, for NHAI, for instance, if you, Suresh, if you tell us about this, the entire National Asset Monetization Plan, will it give a big fillip to this? Give us a sense how, you said by March you will be the largest player in that segment, and I'm sure this is, you're linking it to the National Asset Monetization Plan. So give a sense what's happening there.
Sure. So National Monetization Pipeline is a very significant initiative by the government to be able to recycle existing operating infrastructure assets on one side, and so that the resources that are raised are then deployed into development of new infrastructure assets. So that's one side of the equation. And the other side of the equation is to also, like I mentioned, invite financial savings into the infrastructure as an asset class, which hitherto has gone in only in the form of actual ownership of the asset, but not really through a financial instrument. So these are the two things that through the InVITs that the government is trying to manage here. Within the National Monetization Pipeline, which is roughly about 6 lakh crore, the largest share is that of national highways. It's about 26%, which works out to about 1.6 lakh crore. Followed by other sectors, but largely I think the two other sectors which have a very high share is the railways and the power sector. And then there are other sectors, and I think CMD BSNL is here in one of the earlier panels, and he spoke about I'm sure he would have spoken about the telecom towers as one of the asset classes that could go into the InVIT. Now, if you were to look at it from that perspective, then between those top 3 sectors, which is roads, power, and railways, 2 have already launched the InVITs, which is the NHAI through NHAI InVIT, which I represent, and PGCIL, which also got done in March 2021. So we would expect to see more InVITs coming through in the market. But having said that, I think the advantage that NHAI InVIT has vis-a-vis other sectors is that NHAI has had more than a decade of history of PPP projects or concession management, which is the most essential part when it comes to a robust InVIT structure. Because at the heart of any InVIT is the asset that is getting transferred, which needs to have a very robust structured concession agreement, and given that NHAI has evolved over a period of time and learned and has a very successful program, has been able to put that out into the market and raise a lot of capital. What we do expect going forward is that at least 2 or 3 more InVITs that will hit the market in the next 12 to 18 months. One of the questions that got raised was around the retail participation, right? And I think I'd like to clarify one thing, is that retail participation is in a way still happening, even if it's happening through the institutional route, because the capital that Sandeep is currently representing is the retail money. It is just that the investor is not actively making his or her own decision to make the investment, but the fact is that his or her future earnings or savings that he wants to be coming through the pension money or through the insurance that he is taking or through the mutual fund that he or she has invested into is the capital that is coming in. I think the difference here is that this as an asset class is offering visibility of long-term cash flows, has an underlying asset which is also generating quarterly, monthly, half-yearly returns to the investors, which then align itself to a different risk appetite for the retail investors or investors in general. So I think that's why we have to be smart enough to be able to see that retail, it is ultimately your and my money, and something that we have not spoken about, but I'm sure Tamal will talk about, is the international money that is coming into this industry is perhaps a very large share of that capital is coming in, and maybe we'll take it up subsequently.
Sure, absolutely. Let me ask Suresh this. I was discussing before coming here with some people who are involved in some way, I'm not naming them. I said, look, one issue which is not very palatable, I don't understand what he meant, is this, is that, yes, there is a trust structure, but the property is managed by a separate company, right? Now, even though SEBI norms talks about, all kind of independent directors, etc., but governance could be an issue. He's not saying that is an issue, but could be an issue. Quality of management also could be an issue. And this is coming on the way about the investors' innovation. Do you agree with this?
So essentially what's important to understand is that cumulatively the SPV that actually owns the asset has developed that asset.
Yeah, I mean, let the audience understand what exactly.
Yeah, so essentially a REIT is a trust which was formed to cumulatively own ownership in the form of units of the earnings that each of these SPVs that own these assets cumulatively belong to. The manager is the asset manager who manages those assets. Now, world over, different legislations prevail. India has chosen to choose an external manager format. The external manager really brings in the expertise of making sure that the assets are well maintained, well managed, leased, and made sure that the annuity returns in the form of rental incomes keep coming in, and they release those assets. They make sure the management of the assets is up to the mark to make sure the tenants are going to remain happy, and you see growth. So that the sponsor, whose primarily his role was to bring in assets, build more assets, and go on infusing those assets as a right of first offer to the REIT trust to then buy. So it's a combination that can really give you a lot of opportunity for growth and success, and which is why the legislation took 5 years in the making to learn from lessons all over the world and bring it into place. So what happens here is there's an independent board that represents the REIT as a trust, and they monitor and make sure the returns to the investor are completely in line with legislation. 95% of what the REIT earns and these SPVs earn as free cash flow is to be distributed as dividend. So it doesn't allow for you to retain that and speculate and make mistakes which you would generally do if you had too much free cash flow available to you. 80% of your assets have to be 100% complete. 20% is development potential which you can't fully utilize because you will keep some margin on that. So there are a lot of barriers to speculation and risk reduction. All of these as a combination really work out for the REIT to get delivered. So yes, it is a complex structure, but cumulatively works very well for the investor.
So you are saying for the investor, the risk is much less, and you are saying the governance can never be an issue.
Absolutely.
Anybody else, they want to add anything? I mean, just to make them understand if anybody has any. Yeah.
No, I echo the sentiments. It's exactly that way that, the regulator studied various jurisdictions of how the business trusts are formed, and from a corporate governance perspective and ensuring that minority interests, rights of minority investors are maintained, essentially kept the regulations in addition to what was already mentioned. I think there are a lot of rights which the unit holders have. So if there is any related party acquisition that is being done, and essentially when the trust is formed, a lot of assets do come in from the sponsor, which becomes a related party transaction. And for that, unit holders' approval becomes paramount, without which the acquisition doesn't go through. Or even for that matter, whenever any other additional sponsor gets inducted, or the investment manager needs to change, leverage needs to increase, all these critical decisions require unit holders' approval. So I think a lot has been done in terms of how these regulations are formed to ensure that the investment manager eventually is responsible to take decisions on behalf of the trust and the unit holders, and essentially the rights of the unit holders are maintained.
Okay.
Just to
Please.
I think there is one very fundamental point here, just building upon the 2 points made here, is that there is a separation of responsibility of the investment manager and the project manager from the asset itself. Now, in theory, it is quite possible that one or both the entities may be underperforming or not taking care of the interest of the unit holders. But the underlying asset could be good. The unit holders have the power to change both. Right? If they were all embedded with the asset, then you cannot take away the asset or change that management. Now, through a special resolution of the unit holders, that can be changed. So I think that's a very fundamental and a powerful point. We are at a nebulous stage in our overall journey that we have not really encountered any of this. But if there was incident of malfeasance or unethical behavior, etc., I don't think there would be,
Sure,
there could be an opportunity for them to change it.
So I think this is the kind of clarity that's everybody is looking for. So that's fine. Another technical...
Just to add to that, I think the structure of having a trust and investors being a part of the trust and an independent manager is not new, certainly not in India as well, because mutual funds operate in the same manner, and there is absolute acceptance of this structure. AIFs have the same structure as well. The only key difference here is that because these are specialized class of assets that these trusts
there is a physical asset involved.
Yes, there is a physical asset involved.
Maintenance, yes.
There is also operations that is done by the manager here.
Yes.
Unlike a mutual fund. So I think it's essentially a specialized, in a way, it's a specialized mutual fund which directly owns assets.
Okay, fine. Right? So the clarity is there.
Now, I would like to add one thing here. Basically, what has changed or maybe evolved in this sector is that when it started, probably it was more like the sponsors having the project management and the IM roles. And now what we see is that the sponsors are different, the IMs are different. So this is all actually evolving on the lines of what we see globally. And this is good from an investor's perspective, that these roles are differentiated, and which actually helps in protecting the rights of the investors. Yeah. So these are good things that are happening, which we need to recognize.
Quickly, I have two more issues, so one of you can answer either two of them. One is this, it's little technical, but the accounting perspective. I was going through this. So typically, it's you are raising money through trust from the public. I mean, most of them are privately built. That's a separate story altogether. Accounting is this, after accounting for your interest and taxes, 90% passes on to the unit holders, right? Am I correct? But then I understand that there are cases where the entities who have already floated the REIT, they raise money for other projects. And these monies are typically for bullet payments. No, it could be 9 months, it could be 18 months, it could be 3 years. And once the bullet payment comes, that becomes a problem, because in that particular time, the income goes dramatically down, and SEBI is oblivious of that. Is that correct? Anybody
request one of the...
InVIT is done, like we have major maintenance cost coming in. So when you're designing the whole cash flow, and when you're designing the whole cash flow...
Because I am told, again, as I said, I am not an expert. In fact, this subject is very alien to me, but I was going through that. Is that that's one issue one needs to take care of that. There are projects which are raising money. As and when the bullet payment comes, is it accounted for? Unfortunately, our capital market regulator has not taken into consideration. Is there any validity in this?
It is accounted for fully. Because when you are defining the whole cash flow of an InVIT, whatever bullet payments or major maintenances come in, they are accounted for from the day one when the whole project is taken into the InVIT.
Okay, not for, there cannot be any deviation once it starts, the instrument.
No, because when a project is coming into an InVIT, a evaluation is done, a technical evaluation is done, financial evaluation is done, and that is overlooked by the IM and approved before a project is taken over. In that evaluation, I think all these aspects are taken care of.
Okay. Everybody at this point of time is saying that, yes, talking about the national properties being, monetized and all, he said, look, everything is fine, but in a high interest rate cycle, REITs and InVITs as investment instruments are not that great because their earnings do not go up in tandem with the interest rates, like when what's happening in the bank deposits and other instruments, etc., etc. But REIT and InVITs, once you lock in, I mean, you can't raise your toll, you can't raise your rental, you can't raise your things in tandem with what's happening in the macroeconomic scenario. So you will end up earning less. So it's good in a low interest rate cycle, but not so good in a high interest rate cycle. Is there any validity in this from those whoever any investors here for them?
I think I can probably take that up. So again, there are several InVITs which actually, the strength is the performance during a high interest rate cycle. In fact, over the last few months, capital market activity otherwise has been low, but InVITs have been preferred by investors largely because, especially in toll roads, you have revenue growth coming in from two reasons. One is the traffic growth in itself, and that's linked to GDP really, right? So that's real GDP driven. But the second and the more important factor is the fact that every year tolls are increased, and that increase is linked to WPI, right? And this is something that's been happening for the last 25 years across hundreds of concessions across this country. It's a well-established practice. It's formula-based. The WPI print either directly flows through, or it's a mixture of 3% fixed increase and a 40% WPI pass-through. And given this feature, this is one of the only few asset classes that actually delivers higher returns potentially during a higher interest rate cycle as well. Of course, there are interest costs that will also go up, and potentially your costs in terms of input costs of bitumen, etc., that goes up. But you have a natural hedge in place in terms of a revenue line going up as well. So I think especially in a cycle such as this, there has been a significant amount of interest in people to invest in such asset classes because of this feature.
Thank you. I'm sure it's very reassuring to hear you. I mean, this audience must have, I have learned a lot of things. So maybe one line each from you. Everybody said that this has a great future, but it's evolving. If you had to decide one particular things need to be done to give it a big push, what would be? From the right, we'll start and end with you. Just one line, one sentence. And don't repeat just new or one. So you will be the most inconvenienced person to the last speaker. One sentence.
I would say that there should be some changes in the regulation for both on the pension and insurance side. Pension and insurance side, wherein if there could be increase in the limits and other things for these players. And also as there could be increase in volume for in the market, there will be larger participation, and it can be seen as more liquid product as compared to any other product. So all these factors, I have many things, but because he has restricted me to one line, so I would say that these are key things which basically we need to look at to look from the investor's perspective.
In one line? My God.
One sentence.
Okay, one sentence.
Big multi-lines.
No, I'll keep it short. I think from my personal perspective, I think where we are in the overall evolution of this, I think we have to just have the confidence to back the product at this point in time. I think it's got the right ingredients built in, but we have to give it time. It takes time for any product to mature, gain acceptance. I think Vinod spoke about how his number of investors have grown from a very small concept to a very credible business that we have already reached. So now it's a matter of achieving critical mass. So we have to give it time, and I think the patience is something that we have to stick to. And otherwise, I think it will emerge as a very important asset class.
Thanks, sir. One sentence.
So REIT essentially is a culmination of having to tangibly be able to own real estate, which you can't own in a fractional basis otherwise. Have a top asset manager who's looking after returns for you. At the same time, the annuities are growing because we see India on the growth trajectory for assets of annuity equivalent to commercial real estate, and many other assets will enter the REIT range of annuity assets that you can invest into. Clearly going forward, I think REIT is an asset class which will dominate markets in terms of a sure bucket list to have part of your investments in a REIT going forward, because it's really getting strong and stable. Some more rounds of legislative support, and this will then take off.
Thanks.
Yeah, not one sentence, please. Yeah. I think we've spoken a lot about how the retail composition in the InVITs and REITs, of course, have increased. And I think I also have the same story for IndiGrid, for that matter. We, out of a book of 18,000 unit holders today, almost 15,000 is retail. Linked to that, in terms of what are we still expecting on the regulatory evolution side, is couple of anomalies that we see despite these getting traded on the equity side of the exchanges is, the long-term capital gains become applicable after 36 months instead of 12 months. And linked with that is, the liquidity, as Sandeep also mentioned, he would like to see more liquidity, is inclusion of REITs and InVITs in indices. And I think that automatically brings in the depth, which is sought after by, many classes of investors. So I think these are the 2-3 things that we would like to look at.
Yeah, I feel that the regulation for InVITs and REITs has developed quite well, and the government has done a real good proactive work in sorting out all the glitches. Foreign investors who are aware of such instruments have already invested very well. Indian investors have started, and I feel that in next few months or in a year, awareness would be good, and good investment participation would be seen.
Yeah. I think one of the key challenges is getting more assets into the InVIT fold as quickly as possible. And one of the key challenges that people need to work upon is reducing transaction timelines. Today, infrastructure assets, the timeline to a transaction is very long because it requires multiple regulatory approvals. I think that if he shortchange that, we'd see a tremendous amount of assets coming in and growth happening to the industry as such.
Suresh, you wanted to add something.
Yeah, something that came to me as an afterthought, but very important point, is that we also got to appreciate the effort and the energy that institutions like Trust Capital have brought to this industry. At a personal level, at an institutional level, I've been engaged with them. And what we have seen is that, all the issues that we spoke about, whether it's education of the investors, regulatory interface, having the institutional investors, bringing them to get comfortable with the asset class, new investors, etc., have all happened because there are institutions like Trust Capital who are able to take that story forward. Otherwise, the story remains either with the sponsors or the investors just wanting to invest but not knowing the story. So one thing that if you have to wish for is the appreciation for institutions like Trust and NIPA built a credible organization for them to just take the story forward, and they become successful, we become successful, and the investors make money. I think that's something that I would
Suresh, I think he's taking the onus. He said that organization like NHAI, his responsibility is yours to take it forward, right? It's very good to hear somebody saying that. So that brings us to the end of this. It's a bit technical session, but we tried to make it, as whatever is a learning session for all of us. because they are relatively new instruments. They're still developing, but everybody is hopeful that things will get better. And it's very reassuring to hear that they think things will get better not in distant future, in very near future. So that brings us to the end of this, and give them a big hand, please. Thank you. Thank you all.
Thank you, Tamalji.
The lady and the gentleman.
A big thank you to all our panelists. Ladies and gentlemen, can we have a round of applause for them? And with that, I would request Mr. Abhishek Kedia, Director, Trust Group, to please come on stage, along with Sujal Desai, CFO, Trust Group. We will start with the unveiling of the compendium on REITs and InVITs, after which we will have the memento. Could we have that? Wonderful. I want you to remember, ladies and gentlemen, you will receive the hard copy at the registration desk, or if not, you can scan the QR code and download the ebook. I request all the dignitaries to please take center stage for the photo op. Just make sure you're taking the center stage so that the light falls on your face, right? Memento, yes. Yeah, before that, let's have a group photo. And for the memento, let's start with Mr. Suresh Goyal. Suresh Goyal. Next, we have Mr. Vinod Rohira. Followed by Miss Meghana Pandit. Next, we have Mr. Nitan Chhatwal. Mr. Vinay Sekar. Mr. Sandeep Pandey. And let's have a group photo once again. A group photo once again together for a photo op. Big thank you to all our panelists. Ladies and gentlemen, can we have a round of applause, a thunderous, houseful round of applause for all the insights that's coming forth. And with that, we shall take a quick 15-minute tea coffee break and see you back in 15 minutes.